Good afternoon, everyone, and thank you for joining us today for the panel discussion hosted by the Nexdigm SKP on improving receivable management through digitization. I am Mayank Lakhani from Nexdigm. The world is going through a truly unprecedented time right now. While on one hand, most nations are fighting against the pandemic, on the other hand, organizations are facing an economic shock. However, the economic slowdowns setting in is considered more disruptive than those in the last few decades, with the economy being hit from both the demand and supply side. In a scenario where several organizations are facing a challenge for survival, managing cash flows is the most critical and toughest challenges. Hence, our topic for today's session is improving receivable management through digitization. The speed at which COVID-19 crisis is unfolding, the CFOs have to act swiftly to identify innovative ways for effective collection process. We therefore believe that this session will help CFOs and other finance professionals in identifying ways and means of managing receivable after taking into consideration the severity of the impact and the industry that they are working in. Joining us for today's session is a team of experts to share their observation and insight about the challenges business are currently facing and how it can be managed effectively. So let me introduce you to our panel members. So our first panelist is Manish Singhania, Head of Finance at ArcelorMittal Nippon Steel India. He holds an extensive experience of over 2 decades as a finance expert, advisory and consulting, greenfield project, as well as large manufacturing setup in ferrous and non-ferrous metal, power and textile. Apart from exposure in the core finance function, he has worked extensively in commercial negotiation for mega projects and have done contract management in international contracts and turnkey contracts. Manish is member of all three premier institute, chartered accountant, cost accountancy and company secretary. So welcome Manish. Manish, you may want to just show your hand so that participants know.
Yeah. Good afternoon to everybody.
Thanks Manish. The second panel member is Anil Render, Senior Vice President for Finance, Legal, Internal Audit and Facilities and Property at Tech Mahindra Business Services Limited. TMBS is a subsidiary of Tech Mahindra. Anil is also the Global Head of Finance for BPS at Tech Mahindra Limited. His experience spans over 25 years in the areas of finance, legal, taxation, transfer pricing, equity stake sale, project pricing, treasury risk management, ERP management and implementation, profitability management and financial planning. Anil too is a member of all the three premier institute, that is chartered accountant, cost accountant and company secretary. So before Tech Mahindra, he was associated with Vodafone, managing the finance and accounting. Welcome Anil.
Thanks, Mayank, and welcome to you all. Good afternoon to you.
Thanks, Anil. Our third member is on the panel is Amit Kumar, Director, Business Advisory for Intelligent Automation and Accelerated Analytics. We call it IIQ at Nexdigm Private Limited. He is responsible for growing the IIQ practice globally and providing thought leadership for emerging industry trends. He drives the value from data initiative at Nexdigm, which helps clients realize the potential of the data. He is an aerospace engineer by qualification and holds MTech and BTech degree from Indian Institute of Technology, Mumbai. We call it IIT Bombay. He has 13 plus years of experience in advanced analytics and data science. Welcome, Amit, to this discussion.
Yeah. Good afternoon, everybody.
Yeah. So before we begin, kindly note that all our listeners are in listen-only mode. If you have any questions, please share them with us through a chat box on the right-hand side of your screen, and we will address your queries at the end of the webinar. So let us get started, guys. Once again, welcome to all three of you to the panel discussion. So my first question is, when you look at the current scenario from the CFO's perspective, what are the challenges you see in managing the receivable management? I would like to start with Manish. Manish, you can share your experience and then I'll go to the other panelist.
Thank you, Mayank and Nexdigm team for inviting me for this very exciting and relevant topic seminar. As we see current scenario, as Mayank you rightly said, it's and health pandemic, which was started as a health crisis, health pandemic, it has got so much many economic ramifications. So when this lockdown started in the March, of course, everybody, I would say, not only CFOs, everybody we had go through the lockdown blues. And present scenario, if I summarize, I can say it is a 4 C's: business continuity, cash flows, cost, and from CFO's perspective, more important, control, because as of now, most of us are working from the home, and then business continue running the show from the home remotely, for which our systems are not habituated and designed to that control perspective, cost and cash flow. These are the most important aspect challenges which as a CFO everybody is facing right now.
Yeah, thanks, Manish. Next, I would like to go with Anil and get his perspective.
Yeah, sure. Thanks, Manish. Thanks, Manish, and thanks, Mike. Surely, I think the current scenario, as we know, it's quite challenging in terms of overall business perspective, where business cycles have got stuck. Probably, it's a chicken and egg theory. Where do we start from? Because demands have slowed down, production probably has slowed down, exports have slowed down. More importantly, working capitals have got blocked. From a perspective of working capital, I would say when the collectibles are very slow, people are still conserving cash, don't want to disseminate cash to their creditors, their debtors, and that's a kind of bigger challenge because you have fixed costs running in. Not everybody is enabled from a work from home or office scenario. Info security is a bigger challenge, but I think from a CFO perspective, all these falls into their bucket. They are coping up, how to move ahead, and how to improve the business cycles. That is something which is very important in this scenario, to make sure that your business continuity is on.
Thanks, Anil. And Amit, you would like to share your perspective on the same?
Yes, thanks, Mac. So what I see is, let me just add a perspective, let's say for B2C side as well, right? So in case of B2C, we directly reach out to end consumers, right? The B2C companies. And as the number of customers are very large, they would usually have a certain SOPs in place. So the way you're going to reach out to them, who is going to reach out, what's the mode mechanism, what's the tone mechanism. So there were clear SOPs which are currently in place previously. Now, because of the current scenario, that has come under stress itself, because some of those things can no longer work. So because of lockdown, and now you cannot really meet the customers itself, right? So if you can't meet the customers, then you have to adapt to a different option altogether itself. For example, you might have to consider the alternate forms of payment itself, right? Online payments. Well, earlier the collection might be happening through checks and other mediums, or maybe in cash for certain reasons. Another aspect to consider is the behavioral aspect, right, of collection. So you have collection people and the sales guys who are looking at collections. They have to also adapt themselves now, because you cannot no longer go and meet people. So that the behavioral aspect to be considered as well as a challenge. The third aspect I would want to cover is because the existing strategy can no longer work, there's a clamor now for building new strategies through data itself, right? So they have to again dig deep and get that data. They have to look at how to analyze the information itself, how to build simulations as well around it. So there's a challenge which certainly has come in. Well, people didn't notice earlier about data itself, which is at the operational level. So I think broadly these three challenges. I will just mention one point, which is opportunity as well. So you have across the world, governments has started inducing stimulus into their economies itself, right? So this essentially would help in improving the liquidity of the entire economy, and hence the opportunity for companies to start collecting their receivables. So that's from my side.
Hey, thanks, Amit. So, thank you all the panelists for sharing your perspective on the challenges as far as the receivable management is concerned. And the key takeaways for me, based on the responses which are given by my panelist, is Manish respond on 4 C's. I think that's a concept which he brought out very clearly, that how the companies needs to manage the 4 C's of their companies. Second is the business cycle disruptions, which Anil mentioned very clearly in terms of that how it's impacting the receivable because of the entire ecosystem has stopped or it has become slow than what it was earlier. And Amit, you brought a very interesting perspective of B2C angle, and how you need to adapt to an alternate ways of doing the collection than the way you used to do it traditionally, is an interesting concept. And also we see there are a lot of opportunities also which are there while this pandemic environment is there, in terms of government coming out and trying to support the organization by releasing a lot of stimulus and in the policies relating to the incentive and the other stuff. So going to the second question is that, and that's for Anil to start with, how in your opinion, Anil, the use of analytics or technology can help managing the receivables?
I think more opportunity that we have to go technology wise savvy. We cannot continue to be based on human hands and human body in terms of enabling any kind of action in terms of receivables. Now, the bigger challenge is obviously the bigger advantage of technology, I would say, is that it has sets a clear accountability. It has a clear time span within which an action is required to be closed or which is remaining unclosed. If you are talking about, say, in a collection sphere, I mean, today, if you are dependent on people, who pass on maybe a daily report in terms of what is collectible, what is collection done, what are the targets, the way which is determined, what is the cost towards the collection. Probably, if you see all across, you come across a lot of inefficient system in every bucket you will see. Also, clearly, maybe just to give an example, probably a person who's responsible for a collection coordinates with either a salesperson or a relationship manager. The relationship manager again goes and consults to the relationship manager of a customer, where and their relationship manager. All across, there are 4 or 5 people who are involved in the entire chain. And if these things are done manually, probably you will never get a proper revert, or maybe the revert may be not sure that that's the right thing. But the moment you start using technology, I mean, you get techno-savvy reminders which are required to be given. What is the outstanding, the targets, clearly whatever is collectible, what is the kind of breakup into basically, the base sales, the GST, any kind of TDS and all those. So I'm saying that really helps to become more and more efficient in terms of your collectibles and saving the cost, I would say.
Yeah. Manish, you would like to add your perspective to this question?
Yeah, definitely. As all of we know, we are living in the digital age, and technology omnipresent in all sphere of our life, and it has got deep impact. So, as a business process, as a finance person function, definitely we cannot be isolated oblivious of this technology usage also. And for managing receivable, I would like to share the live examples from the B2C, or I would say public utilities companies. Forget about the private sector. Like if you say electricity boards, gas boards, during this lockdown also they collected the money. They could not generate the bill, so they went up to took the help of the consumer. As a consumer, you share the photos of your meters reading, and accordingly they generated the bill. They sent you the link. You sent to as a consumer the links to make payment. So technology in receivable management and receivable management per se, where the focus is onto the cash collection. Technology usage of the technology, of course, becomes more important. Earlier, as Anil rightly said, earlier we used to be dependent upon the salesperson to give him target, what is the collectible list today or what is the next week. Now, with the technology usage of the technology, we can push that this receivable management or follow up through the technology directly to the mailbox or phone of the end customer also directly, where we can put the follow-up messages to them, and definitely then accordingly then we push the virtual bank accounts or links for making to payment. Of course, B2C has very well adapted these technologies. B2B, of course, this adoption is happening. Of course, it is not that much of fast, efficient, which has happened into B2C. But of course, B2B also we are taking steps in this direction.
Yeah, and Amit, you would like to add anything?
Yes, Mank. So what we have seen is, I'll just expand to point which Manish was saying. So what you've seen is that the entire finance function is undergoing transformation nowadays, and that is because this finance is central authority, right, in the entire for businesses. So it has access to a lot of different systems and information coming from pretty much all the functions of the company itself, and hence there's a lot of data flowing in. You have access to all the systems as well. So there's a finance which is function entirely which is undergoing transformation, and use of analytics is increasing day by day, and receivable is not untouched by it. So receivable, in fact, receivable is one area which has been put as a prime example or priority simply because it has a direct impact on cash flows itself, right? So receivable hence is a clear thing which technology having a big impact on. Now within receivable, there's actually a lot of decision making required, right? Across levels, it will be strategic ones, it will be tactical and operation ones as well. And each of them, if we have, and the data is ultimately the core ingredient of this entire piece, and that is what will provide the insights required to take the specific actions or at across levels. And for that particular process, digitization, technology, analytics is the key enabler itself. So that's the broad framework that we look at. Now, what we usually seen in a COVID kind of scenario, that few of our clients which are technology savvy were able to get this information very quickly, this data very quickly as well. So when this situations struck, they didn't have to firefight on getting data. They directly focus on their collections. While in other organizations, we noticed that there's a lot of firefighting which is happening, analysis, getting information together, and then analyzing it itself. So at a broad summation of this, I'll say there's a lot of value which is available in data, which the organization is to derive value from, and in that there's a significant effort required in reconciliation, data cleaning, and building what if scenarios. So essentially, the gap, I still say, the gap between cup and a lip, right? So data exists, it's about just now using it well. So that's from my side.
Right, Amit. So just to summarize, is that for me, one is the technology helps in clearly defining the accountability and responsibilities. So that is the point which I see a huge advantage to an organization. Secondly, is how traditional companies are moving to the digitization, who were never used to using the technology, and how they are getting benefited. Third is that the value which the data carries. I think the most of the time the company spent in compiling the data and getting the right data at right time, which probably with technology can help them to minimize those time and optimize the productivity. So in addition to that, I would just like to add a couple of perspectives that nowadays the technology has become a very integral part of all the business processes, and customer management in the receivable has been the focal area of focus for implementing the technological tool to ensure that the customer has a great experience while we are going for a collection also. But the ability for an organization to get the right information at the right time through digitization can help significantly the organization to optimize their working capital need. Business really can't afford to lose the time while they are trying to get the right information, because I see a lot of business are spending more time on getting the right information rather than taking action based on the right information. So I think technology can literally do away with these issues and the challenges which the organization has today. So going to the third questions which I have. In today's digital era, multiple system and technologies are being used in various business processes, because we are assuming here that the businesses are using technology, but they are using multiple technology platform and multiple system while they are running their processes. Which all systems are employed in your organization, and do you see a need to consolidate information coming from multiple system and technologies to able to drive data backed decision making? So that's a correct interpretation of this question, and I would like to start with Manish, and then I'll go to my other panelists.
Yeah, thanks, Mike. It's a very relevant question. And as I say, because we are into digital era, and this digital transformation is not a one-time journey, it's a continuous journey. So definitely across all organizations, stepwise digitization happens. And during this happens, what happens? There are, as you rightly said, there are multiple systems comes into this picture. And with the digital era, the biggest advantage or disadvantage, both which I say, on real-time basis, lot of data is getting generated. Now the challenge is to get the meaningful data, right information at the right time, and that is the need of the hour. So presently, the unification or harmonization of various systems into the single platform, that is the biggest challenge, of course, which organization is happening. Here, if I ask from my organization perspective, we are using ERP, we are using dashboards for the. We earlier also we are, of course, we are using ERP, and lot of reports, daily reports, which used to be at least 10 to 15 type of reports on the various form. Each function used to be generated. And then, as you rightly said, then we move to the dashboard, where the unified single source of information, which is verified, and entire organization speaks for the single number that we have adopted. We are going further for further digital transformation, where we would like to use the push technology, where we get the information pushed to the, instead of pulling the information from the system, relevant information get pushed to the relevant users and at the correct time. Those type of technology we are using. We are planning to use.
Right. Amit, you would like to go next?
Sure, Mike. Like Manish mentioned, that thing, every company has a lot of different systems, right? It has, and again, finance being the central one, it has access to ERP, accounting, CRM, payroll, and a lot of other systems, and Excels, and manually maintained Excels as well, right? So, and each of them have different information. It has different data quality as well to be looked at, and hence the first need of the hour is to create centralized databases itself through multiple ETL tools which are out there. So again, for the ETL tools can vary depending on the company and what they have access to, but this is and similar databases as well. So it can be on the cloud like AWS, or it can be directly on a SQL server, on a physical server. So that's essentially the need of the hour. From there, once the data has been put together, standardized, harmonized, the next bit is creation of a comprehensive dashboards. So dashboards can be on tools like, for example, Power BI. It can be on Tableau, ClickView, D3, and the other ones out there as well. Creating a dashboard is what would help in getting all the information at the click of a button, which whenever you require, you will get it itself. So hence, whenever the need arises, let's say we are able to go directly and get the information. One important aspect of dashboards is a lot of companies look at dashboard, let's say from a reporting standpoint, just putting a report of numbers. What we look to have is having the analysis-led dashboards itself. So you want to look at certain analysis to be done. That is what analysis you should go in the dashboard itself, and the analysis also should keep on changing as well. So, for example, in a COVID kind of scenario, certain other KPIs that we used to look at, for example, even things like DSO, has lesser importance now because DSO is a component average monthly daily sales, right? So because daily sales also is getting impacted, so DSO may not be the right KPI itself to look at. So one need to hence keep on adapting the way you look at information, using analysis, using dynamically created dashboards, so that we are able to focus on getting the relevant insight for the relevant times as well. So that's, I think, what we want to say. We have seen actually cases where even if system seems to be seamlessly in place, ERP is very well, data is already there, your accounting system data is already there, but still it takes a lot of time to get it together itself, simply because of lot of manual logics built into it, lot of Excels things to be done finally in Excels. Whichever system the company has, they should look to leverage it. If then they don't have something, then that's something they should look at procuring that particular tool for it.
Yes, thanks, Amit. And Anil, you would like to share your perspective?
Yeah, sure. I believe most of, we use a CRM, I think, but CRM at times is not fit for purpose for everything. At times you have to use specific tools for specific purposes. For example, for collections, you have tools like Captera, Shaw systems, High Radius, and all. Also the idea is whether you use any kind of a system, whether it is a CRM or whether it is any kind of a tool, you get a unified information in terms of what is relevant for that particular area or activity. And you built it in terms of a dashboard, like Amit said, we have Power BI or a Tableau where it is displayed. Now it is also how do you analyze this information and bring it to the fore of the management. So I'll just share a simple example. We had a dashboard which used to be displaying in terms of outstanding every week ideally, which used to go to the individual stakeholders who are responsible for those collections, and it used to go to the business heads. And ideally we saw that action was not forthcoming. We did a simple thing of just doing a color coding, in terms of what is going, or maybe say above 60 or 90 days, marking it as red, and automatically we starting catching the eyesight. It was a simple thing which we did, but it started catching the eyesight, and I mean, the collection activity then probably took much more better pace than it was. So ideally, that's what I'm saying. And analytics is also important in terms of how do you analyze it, in terms of what the systems gives, whatever the system, the information is given, and how do you use the information to the best advantage. It will be from multiple systems. You can't have one single system or one data source where you will get the entire data, but possibly multiple data sources collating into one single system, one single data source, and that is the right source, right data, which is basically used to make decisions, take actions, analyze data, and take it further.
Right. So in addition to all of you, so what I feel is that I think a lot of time is going on reconciliation of reconciliations, because you have multiple system and you try to tally a data of one system with another system. And I think most of the time of sometimes the finance professional or the team goes into that. And what I'm hearing is that a lot of us know the advantage of the dashboard. Now the question is how we can make the dashboard more dynamic. The idea is the static dashboard is not sometime very useful. As the environment change, the circumstances changes, you need the flexibility in the dashboard which can keep creating different insight for you based on the circumstances which are there. And we all agree that there has to be a mother system of the different child system which we may have in the organization, because else you will become mad. You may feel that you are having a digitization in your company and technology usage, but it is as good as like a manual process, because the time which you will spend in compiling the data would be more than the benefit which otherwise you might be deriving. So it's very critical for us to have a better implementation of a system while we are taking actions. And organization starts the digitization with a small journey, and when they become big, they forget to make things more comprehensive and consolidated of systems. Point gets missed out, and then the same old system keep continuing. So I think for me, the takeaway is that you need to have a continuous relook at the way you are deploying your technology and digitization in your business, and keep changing and ensuring that you derive the benefits for which you have implemented it. So that's from my side. I'm going to the next question, which is again extension of my earlier questions, because now we spoke about the dashboard and getting insight from the dashboard. I'm sure after looking at the dashboard which are in the context of receivable, we go to the recovery strategy. So my next question is in the context of recovery strategies. What recovery strategies one can adopt to recover money without affecting the existing sales or a growth with the existing customers? I think so. I would like to start with Anil for this question.
Obviously, as a business cycle, when you sell, you have to receive the monies. That is very prominent. Obviously, contractually, it is important. What is your credit period? 30 days, 60 days, 90 days, or whatever it may be. You start with that. I mean, to touch upon before we start with the collection, it is also depending more on your relationships, how well you are in a good relation with your customer, because it is not always the contract which works. It always at times there are mutual relationships which works, and probably we have seen that going far ahead. And those obviously does relationship come out of your rapport or your delivery which you are making to the customer, or your quality of goods which are there. That's one part. Second is now again, let's move to, what is the kind of receivable which you are there with the customer. At times we have seen, many times payments would have been received from the customer, but somewhere, in an organization it gets lost because these are not mapped to the receivables which are there, or they are coming on account, probably still they are lying in a single on account, and your debtors are still outstanding. Probably many times you don't know what is the breakup of those receivables. They are still unallocated and they are lying there. So clearly, you find a lot of things which are done manually. You lose the face in front of the customer at times when you go to the customer and say this is receivable, and he says, "Yo, I've already paid that 15 days back." So clearly, what do you do? Just touching on to the earlier revert, or earlier experience what we have. I mean, obviously, once you have a certified, I would say, an authenticated dashboard, which is there, which clearly spells out what exactly is receivable and what is not. It also basically helps you to balance in terms of, what is an overdue, and where your risk starts, as an organization. What is the quantum of risk you are ready to take, whether it is above 90 days, 120 days, 150 days, 180 days, whether you need to start making a provision for for a doubtful debts, in terms of recovery. More important is also from an existing client, the touch and feel is more of the sales. The sales people have to give a feedback in terms of what is the risk profile of this customer. Is he into any kind of a challenges or in a working capital situation which is going to block our receivables? So accordingly, future actions can be taken in terms of the existing business or in terms of the new business which you are going ahead with. Many times it is also a discussion which have with the customer in terms of he may ask for a certain value of discounts, or he may ask for a different. But it all depends on the situational requirement in terms of where he is and where he want to lead to. Because you may have a 20-year-old relationship where a customer is in a challenge, maybe in a current situation, and he asks for some assistance. Probably you, as a relationship, you have to extend something so that he comes back to his working capital cycle. But at the same time, you need to know in terms of what is the kind of risk you are willing to take and how far you are ready to.
Yeah, thanks, Anil. And Manish, if you'd like to add your perspective to it.
Yeah. I would just like to share, which all of us in our childhood had the experience of the circus, where used to be this ball game or hat game, where the player used to rotate so many balls or hats into hand, and that type of precision, yes, not a single ball slips from his head, and that type of precision, of course, is required. And in this present scenario, where yes, you will have to align between the new sales also, because growth trajectory comes from the sales only, and at the times you cannot compromise on the cash flow. Second point, which all of us has to admit, agree, by maybe with pinch of salt, where entire world, all economics are contracting or slowing down. If I give an example, in US 4 years back, there were 100 plus companies who were credit rated triple A. Today, it is only 2 companies we are triple rated in US. The fact of the life remains that yes, all customers who were the credit worthy earlier, yes, today in today's scenario, their risk profile definitely has deprived. They are more riskier. Credit profile is more riskier. So now question comes to the as a CFO finance professional is to balance the business case as well as your cash flows both. And that is of course a very delicate task. And so accordingly, we'll have to take the credit risk, but we'll have to align the credit policies in such a manner where we are able to achieve the sales of course, without less compromising with the cash flows. According to what I feel, we see that there are 3 mantras which I would share for the cash flow management perspective: securitize, monetize, and rotate. If we are able to achieve this journey, then we will be able to achieve the new sales and as well as maintain our healthy cash flow. That's all from me.
Right. No, I completely agree with both of you, Anil and Manish. Amit, you would like to just add a couple of perspective to it, and then we can move to the next question.
Sure, Mank. So existing scenario is unprecedented, right? So this is something that never happened before. So because of this, what has happened is that the companies have to relook at the customer risks itself and to be able to assess the kind of impact that the customer have seen. So the perspective that I would want to bring in is that it is now requiring companies to understand the customer a bit more versus the way they were looking at earlier, and having a 360 view of the customers itself, basis the information that they have available with them, and basis the external information which is there. So, for example, Manish mentioned about the AAA rating, right? That's external information. There will be other things, for example, um, there are lockdowns happening in different geographies currently, right? Different location, industry, different location. It's varying across, the impact is varying across different industry, different geography. So that have something to be cognizant of. So somewhere we have to build that particular aspect of what's the impact that's there on the customer because of COVID. Also, we have to understand the importance of, let's say, that customer's importance to us and our importance, company's importance to the customer as well, right? And hence we are able to play that information. Along with that, couple of other factors to understand the customer would be in terms of whether the government stimulus has come in. So does that really going to benefit now the customer or not? Is there any delinquency risk itself that we see? Okay. So I think these are different areas that we need to look at from perspective of customer understanding and distress in this such case of distress event, and hence able to come up with a differentiated and customized approach for every customer. That's the need of the hour itself, where we look at every customer, understand where is the problem that they are facing, and hence customize your strategy accordingly, case to case basis, whether it requires restructuring or discounting or late fee waivers, or even certain cases large haircuts and or the legal side as well. So that's, I think, is quick perspective from my side. Yes.
Yeah. Thanks, Amit. So for me, one thing which is very clearly coming out of the discussion is that it can't be one size fit to all the customer. You can't have the same strategy of recovery for all the customer. You need to do a proper segmentation. If not each customer, you may have a separate recovery strategies, but at least you need to segment in a way which makes sense for that particular segment to do it. And at the same time, your recovery strategy should not be such which affects your sales or the growth engine of the business. So you really need to balance well. You just can't go behind receivables and suffer the business, and you can't go only towards the business and suffer the receivables. So it's an art, and a technology can become an enabler in ensuring that you score 10 out of 10 as far as your recovery strategies are concerned. So going to my last question, and then we'll go to the question answers sessions, and we have received lots of questions from the participants. I'm not sure whether we'll be able to give justice to all the participants, but this will be the last question from the panel discussion, which is, how do you look at the current pandemic from long-term perspective? What is the new normal from a business perspective that you foresee, and what receivable management strategies you are thinking of to align with the new normal? So Manish, we can start with you.
See, now this new pandemic has opened up eyes for all, and it's said that the earlier policies, I will not restrict myself to the only entire perspective of the business, and have changed. The globalization which we were talking, now it is entire supply chain management, etc. We will have to work out, because it's at the risk. Supply at your associate, maybe customer supplier, which you have to see. If you see few days, of course, from Government of India perspective, our government has already given the fiscal stimulus. Of course, that is a very large sum, and have tried to imbibe confidence into the business community to take the steps. Our PM has said into the various events, in industry events, that we have to come out from the earlier mentality of the command and control to the plug and play to restart the economy. And that gives a very different perspective to the CFO, the financial professional. So as a financial professional, also then we'll have to come out from the controllership mentality to the business. They are able to the business decisions, taking the business first. Business is the name of the risk. But at the same time, from a financial perspective, risk management becomes more critical, because we'll have to control and ensure that whatever business decisions we are taking, risk management policies comes into play. Whatever business decisions we are taking, that are backed by the data, that are backed by the information, and we as a business are taking only risk which we can oversee, which we can overcome, which we can burden. We can, in the chest of the restarting economy, in the chest of taking growth, we should not go beyond the risk which we cannot overtake. That is the whole sum which we'll have to take. From the digitization perspective, because now we're in digital era, and this pandemic has created more opportunities or necessity for digital journey. And as a financial professional, I think all of us has to unlearn the alphabets which we learned into childhood. New alphabets into this new era is A for artificial intelligence, B for bots, C for cloud. That's what I think. These are the two areas which I think as a finance professional we'll have to look into.
Thanks. Thanks, Manish. Anil, you would like to add anything further?
Sure. Yeah, I think definitely what we thought, possibly nobody thought of this pandemic and it is coming. I think some eye openers are very clearly, your business has to be enabled with technologies. Probably, the more you are techno savvy or more you are enabled with, new tools and technology, your business enablement becomes the quotient of your business enablement becomes much more higher. Also, what we see, I mean, probably, I would say, risk management was probably, in many Indian companies were not even prevalent. Today, it takes a major role to quantify what your risks are. It could be your business risk, collection risk, forest risk, whatever they may be. These need to be quantified, at what they would be, and how do you mitigate those risks? Clearly, how do you grade your risk? Which is critical, medium, or low. I think that scenario needs to regain now, and that becomes of primary importance, because in the current scenario, quite possible you are hit with a pandemic today. Probably tomorrow we don't know what is going to happen. So that's one. Secondly, is also in terms of your committed cost. Today, like, a big learning has been that we are sitting in a lot of times on a committed cost. How do you get into a pay-per-use model? Where your commitments are not there, but as you pay as you go types, and possibly you bring down your cost down. The other element is also to look at, where are your spends which are going. Can you curtail those? I mean, where are the wastages? Where are the alternates? Today, I mean, we clearly saw once upon a time where the sales team used to say, no, I need to travel to meet a customer. This meeting is very important. This is the last meeting, or whatever it may be. Today, probably with current situation, you say most of the deals or most of the businesses happening through video conferencing or webs. Probably, how do you keep that kind of interaction on, unless and until you have to travel, you travel. So I'm just giving an example. How do you eliminate those kind of wastages which are there, which will really help you to boost your margins, or build a culture in terms of consciousness among people that unless you say, you're not going to survive. And lastly, your working capital. You have to really manage it more efficiently today. As we saw, the business cycles have become much more slower. Receivables have become slower. Sales have become slower. So I'm saying all across, we are just getting stuck here. And how do you manage your business cycle is a question which we really need to answer in this pandemic.
Right. Thanks, Anil. And Amit, would like to add a couple of perspectives. Maybe we have a short of time now, so maybe we'll have a less time to answer this.
Sure, Mike. So the perspective I want to bring in is, I think a lot of points are already covered by Anil and Manish. So the additional aspect I will bring in is, so what we see going forward is that we need to understand the customers a lot more. And we have to understand the impact of different kind of events which might be happening to customer a lot more. So for example, COVID is an exceptional scenario, so we now want to understand what is happening to customer, right? But there would be other kind of distress events which already would be happening. So for example, government might be changing the repo rates or import duty, which will have an impact to the industry and certain customers, right? That's a macro level distress events. You have micro level, for example, you have, let's say, lockdown happening still in certain geographies in India. You would have floods happening in certain areas, droughts happening in certain areas. So there would be different kind of events which continue to happen at different kind of levels, and hence the understanding customer is paramount in this scenario. And hence I do see that there's going to be a distress handling and actually understanding customer framework, which will start getting created a lot more as we go forward. And that is what will feed into that using internal and external information will start feeding into the entire strategy of collection itself, right from your personalization to your prioritization to your communication, all three aspects. And in that, then you would have predictive modeling, machine learning aspect then coming on, sitting on top of it itself. So hence, with all the information getting first in the first place, then it forms, then strategy will happen through machine learning algorithms and other algorithms, which Manish also talked about. So that's what essentially I see going forward. And so as a last point, what I see is there is a lot of value from this data about internal and external to be looked at, and it's a journey which I do see that different companies will have an accelerated approach on that journey now.
Right. So I can't agree more than what you three of you have just said. So for my perspective, it is the collection process will need more rigor and use of technology in the current times. And not only in the current times, I think it has to become like a consistent way of using the technology, considering the fact that now it's going to become a new normal. Optimization needs to know how to use the data, how to get the correct data, accurate forecast of receivable and collections. Most of the organizations spend huge amount of time, as I said earlier, on the reconciliations and reconciliation of reconciliations. The essence of timely collection is lost due to the reconciliation issues. So organizations will have to use artificial intelligence or machine learning to ensure that they are able to move more from hindsight to insight to foresight. I think that's going to be the new normal, and start optimizing the collection process. So thank you, my panel, for sharing your perspective for all the questions. And we have lots of questions which have come. We'll try to cover at least 2 to 3 out of those questions. The first question I would like to ask Manish, which has just come from the participant, is Manish, do you think channel financing or receivable discounting is helping you to manage receivable efficiently?
Thanks, it's a very relevant question. And as I represent B2B, and in case of your cash flows, you cannot pursue the cash flow we discussed. Yes, you will have to manage the business also. You have to run the so in that present situation where you are open, but your supplier customer is not able to supply the goods or recover the money. In that, of course, once his cash flows is recovered, then definitely it goes to impact cash flows also. So we had already channel balancing and bill discounting facilities with our customers. And last 2-3 months, of course, 2 months, we have further intensified. We have started with more facilities to our customers in their question, so that they are able to manage our cash flow. This is from the customer's point of view. From vendor's point of view, also we have bill discounting programs. In fact, we have got registered on MSME platforms for bill discounting for them. So then they can also discount the bills, and then they can get the cash flow. And we are able to manage cash flow both ways. One is early collection from the bill discounting from the customers, and then second, MSME vendors also get the payment from bill discounting. And as an organization, I am obligated to make payment for extended dates. So definitely, it is one of the strategies which help the cash flow.
Right, and it doesn't take care of only your organization; it also takes care of the entire ecosystem with which you are functioning, and it helps the flow and the cash flow moving well. Amit, again, this is a second question which has again come from the participants. Is that while we have dashboard and analytics, usage in our receivable management, but the question is that it has to be supported by the automated actionable triggers. And you would like to share your perspective of and your experience of how an actionable triggers are playing a vital role while you develop the dashboards.
Sure, Mank. From an actionable trigger perspective, it's about constructing what kind of information has to flow to whom at what time. That is the genesis of the triggers itself, right? So certain can be specific triggers that you create every month. For example, it can be reminders itself, which is a more automated systems of triggers itself. Certain triggers will come in only in certain kind of scenarios only. So for example, you would start seeing a particular customer, let's say we start seeing any issues with that itself. You start then putting a trigger basis the past trends itself. So it's not an automated one saying that you have to go and collect or maybe call this person at 5th of the month or say, but in this case we'll say a certain trend where we're seeing his payment cycles are delaying over a period of time. So maybe you need to focus a bit more and understand what exactly is happening on that particular customer. So those can be specific triggers that one need to look at, and that's what the kind of things that we have looked at previously. And we have taken it one level more by building actually prediction models as well. So we have built models saying that which customer is likely to pay when basis their past history itself. So their customers would normally pay on time. The customers will normally would take advantage of the system and pay slightly after time, a bit after time, right? So there are all kind of customers out there. So basis that, if we are able to predict what is going to happen next month, then automatically those interventions can be and the strategies can be decided, and those strategies itself become the trigger points for the sales and collection guys to then chase the customer after itself. And of course this will have input of the sales guys as well. So it's not a one side thing, it's a basic collaborative, fully collaborative system.
Right. The another question which had come was again relevant for Manish. Is the industry like steel, which is a capital intensive company, are companies working out some digitization tool to improve receivable cycle of your channel partner? So while you do in your organization, are the companies taking any action to improve the cash flow for the channel partners?
I would say, of course, two things. One is that we are working on the e-sales platform, where the focus is that instead of physical sales, we work on the my channel partners can work on the because they place the orders on the sales orders and do the entire sales process can be digitized. Number one. Number two, from what we are pursuing in this tough time, to help out our customer is to how to reduce the entire supply time from order to the supply time, DSO time, how we can reduce. So accordingly, we are working with them to understand what type of their needs are there, so then we can plan our raw material in time before their place that order comes. By the time my raw material is in this place, so that entire processing time of raw material supply time can be reduced. This is the second aspect which we are working with closely with our customers to another. Thirdly, to improve their cash flows, of course, that too, because both are the B2B, the ecosystems are different. So far, we are not actively working on that, but definitely it's a good suggestion. We will have to start looking into that aspect also, how we can improve or increase our bandwidth of digitization to help our channel partners also.
Right. So it's very clear that there is a need where not only the company but the ecosystem of the company also uses the technology in the receivable management, and how the large organization can support the entire ecosystem to make sure that the things are moving better. The next question, Anil, I'll be asking you, which is like participant has asked, we do analyze in Excel the entire receivable and the collection, but don't get the clear insight into because it is very people driven process. How can we simplify this, or is there any better way to handle this instead of using Excel? It's a question which was drafted in a very very unstructured way, but I just try to make a sense out of it. Yeah, Anil, so if you would like to share anything.
Yeah, I think this is the common thing which possibly most of the companies go through. See, the reason is what is presented in Excel. Probably everybody has a how do you calculate DSO? Everybody has his own set of formulas. If possibly I want to show a better DSO, I may even change the formula, saying whether I need to consider the 3 months average revenue or 12 months average revenue, whatever it may be. And these are susceptible to a lot of changes. So simple thing is obviously either you look at a collection platform where it ends end to end, or the other way around would be basically I do understand that not everybody will be able to invest into a platform depending upon the size and the capacity of the organization. Try to get a macro build-up which actually gives you a set of rules where you put in the data and it just plugs up. I mean, that's the most simplest of the solution, I would say, which will come up. Otherwise, definitely you have digitization tools. Definitely you should look at those in the long-term perspective. But short-term, rather than making it on Excel, have a macro build-up so that there is more accuracy in terms of what presently you are doing. I mean, that would be the shortest and the fastest way out.
Right. Anil, thanks for that. Amit, you would like to add one or two perspective to this because you may have dealt with such situation many times with the customers.
Right, thanks. I think the key part here is standardization, right? Because once somebody is doing an Excel, it's basically becoming the people driven. That's what the participant was talking about. So it's about standardization. So standardization needs to be can be achieved in multiple ways. So Anil mentioned about looking at getting macros, for example, right, in standardizing the process. So different information. So there's two layers to it. One is the data itself, which is coming from different places, and the way the person is massaging the data or the cleansing the data itself. That can vary. So hence that definitely requires automation, because the core principle of data has to be proper. So the quality and the sanctity data needs to be there. Nothing can be wrong there. So that definitely requires a certain amount of automation to be there. Tool can of course vary, but the automation needs to be there. The second part is analysis on top of it. So analysis is the portion where having macros in certain ways, or having even BI tools or specific analysis, those essentially will help.
Right. Thanks, Amit. And I think this was useful. There are more questions, but considering the time paucity, we'll not be able to take all the questions. But what we'll do is we'll try to ensure that we respond to all the questions which are raised by an email to all the participants. Now, this brings us to the end of today's session. I am very thankful to all our participants and the panel member for your time. In this session, we covered the critical areas in receivable management. Yes, it is evident that the pandemic has brought significant challenges with it and will have a lasting impact on the way we operate, and it's going to become a new normal. Business leaders are looking for adopting newer technologies such as BI tools, big data, advanced analytics, cloud computing, etc. Survival in such distress scenario and being prepared for such unanticipated events in the future will be the key going forward. Ultimately, a lot of data is there with the system and outside. All that business lack is the ability to derive value out of those data. New technologies and tools can play a significant role in furthering this journey. Many a time, this may not necessarily be an expensive affair. Looking at potential saving in the financial cost of working capital, this initiative can fetch a good financial return and a benefit. Ensuring maximum visibility to build customer-specific strategies is going to be an important building block in this process of receivable management. We hope that you have drawn great amount of information from this session, and that will help you understand and evaluate your strategies and make informed decision, taking into consideration the talent, operation, supplier, customers, and the entire ecosystem of the key stakeholders. All our participants are welcome to connect with us. We at Nexdigm will be happy to address any of your queries and provide your directional guidance in adopting organization in the area of receivable management by using the technology or digitization. On behalf of the team at Nexdigm, I thank our distinguished panelists for sharing their valuable experience and participants for actively participating in the session to make a success. Thank you once again, everyone, for joining in. Stay safe and stay healthy. Thank you.
Thank you.
Thank you, participants,
Thank you.
all participants who have actively joined the session. Thank you, Mayank and Nexdigm team, to give me opportunity to be in this panel to interact with the participant. Of course, this was the webinar, so we could not face-to-face meet the participant. Maybe what becomes new normal. So definitely, I'm looking, Mayank, invite from you for the proper seminar where we can interact with the participants.
We'll be happy to do that, Manish. Thank you for joining. Thank you all, and we'll leave. Thank you.
Thanks. Thank you. Thank you. Thanks.